Kill that, man. UTSL live on my subscription feed on Instagram and here on YouTube. We're looking at UTSL here. This is the utility trade. It's firming up today. Still in that box, man. But it's breaking out at the same time. I'm doing all right, man. Thanks for asking. So we had our box. Pretty tight one too, man. Depending on how you want to draw it. So technically, yes, we're still in that zone, you know, in that area. It's really like the middle of it. I mean, this zone here, I mean, makes a perfect money flow pattern, right? Price sideways, price up, price sideways, price down. And that's the money flow pattern. And so, you know, waiting on those moving averages to start coming in. And I think that's the biggest, you know, this is a little bit of a gray area, but it's when that spread, when those moving averages are really far apart, there really is no rush on your trade. I mean, it takes weeks and months on a daily chart to fix a drop. So if we look at stocks like we've seen recent with, say, Netflix, you see what I'm saying? Like, there's no rush until those moving averages. If you literally wait till those averages, yes, we're doing the 20. Yes, we're doing this and that. And yes, we want to buy ones, but nothing's going to happen. There's no rush. There's nothing until those averages. The averages are an indicator of, you know, like a yellow light or a red light. It's like, hey, slow down. Like, there he goes. It's going off. When they're spread apart like this, nothing can happen. It is not going up. And if that's your general default, most of the time, that's going to work to your advantage. You're not going to be in such a big rush when you have it. Like you notice, I just started buying Bitcoin last night. You know, guys like, well, I got a lower price than you. Okay, I get that. I'm not trying to get. To avoid your video being stopped and removed, please don't share any more recorded music during your broadcast. If your video is removed, it can't be saved or replayed. Huh. Oh, man. Instagram's trying to hate on me. They don't like the music being played. What if it's your own music, man? Like, what if you make it? You can't play it? Sorry, no music. No rush. You're right. I've been observing FOMO with myself. Yeah. All right, Instagram. I won't play any mood music. Sorry. Jesus. I wish there was... It's like fucking having an evil stepmother, man. That's Instagram. Evil stepmother. So we see that. This is Bitcoin. Yesterday was when I decided to buy some. Why? You notice the 5 and 10, they've come together. It's coming together. Now the 20 is still sloping down, but at least we've got some sideways action actually confirmed by the moving averages. Does that mean it's the absolute bottom? Nah. Yeah, apparently you can't play. I can't even play my own music. They'll be like, oh, you hit your limit. No more jokes. Our algorithm has watched your content and we've concluded you said 4,805 jokes. No more. No more jokes. Everything you say will be run through our facts checker. Next thing you know, they're like, hey, you did that house video. You had the math wrong on line 4. You're busted. You're blocked. This is Bitcoin. You know, I don't know if it's a bottom. This is where I nibble. That's stage 1, right? The point is those moving averages coming together. If we go back and look at T today, looking stronger and stronger. You know, it's not until the moving averages come together, right? So when we have them wide open, you're going to notice as price moves in closer and closer and closer, those things start to come together. It doesn't mean it can't keep it from going down, but it's just the way it looks, you know, the way the chart looks. You can get a feel for the chart. And it doesn't play out perfect in all positions. Now, the UTSL is a triple leverage fund. You got to understand these. Triple leverage can eat you, man. I hold some of the triple leveraged on the stock market. It's not my retirement. Okay. If that shit went to zero, I'm okay. They are leveraged funds that I play, and I build them over time, and I've just been adding to it, and it is what it is. It's going to do what it does, right? And when the market's flying, it's up huge, and when the market's down, it's down huge. And you're just playing a matter of time game. Well, this is a triple leveraged of the utility stocks: Southern Electric, Duke, Edison. We in the money flow game, I just show the ones that I own. There's lots of them out there. Sometimes I show stocks I don't own that I think is worth owning. NE is one in the utility sector we've been talking about. Notice the moving average is all coming together here. And that this was possible. Laggard, this is a Florida utility. They pay a nice little dividend. It's a laggard. Is it a laggard? Well, it had traded at a premium. Now it's trading technically way below its 200-day moving average. If the sector's breaking out, there's a good possibility this thing pushes back up. So one strategy is to try to play laggards. And you say, why is this a laggard? Well, this is a utility stock. Compare it to Southern. See how little the pullback was? Compare it to Duke. See how little the pullback was? But now compare it to FE. A little deeper. See how deep that pullback was? So as you watch a sector, and the way to know this is go to the XLU, the actual ETF for this sector, and you can look and see what are the top, what are the top stocks. Let's see. Let me pull up something real quick. I'm wondering if we hold this little rally we got going. I'm not so sure yet. It's Monday. It's a little early to decide that we hold this. All right. This is the XLU. So inside of this ETF, by order of size, I don't know how they determine this. I'm sure you can go read on that. This thing holds top 10, 20, and you click down. If you click here, it'll go to more. There's probably 40 or 50 of them in here, but they weight it. So NEE, that stock we were just talking about, is their top holding. And then Duke, I own. Southern, I own. Dominion D, we own some of this. I don't own SRE. I trade AEP, but I haven't traded it in a while, and I should have. I don't own any XLE. These are all good, though. PEG's good. And Edison, I own some. But look at AEP. Now, as you learn this, look at that. Barely came down. So we were buying this when it was much cheaper. And you see why I own Southern, Duke, Edison, and why because these are the stronger companies inside of there, pay a nice dividend. And that's just from looking at the utility sector. It's one of the 11 sectors of the S&P 500 is utilities. We could extrapolate the same concept to banks. We could do it to oil companies. So oil would be what? The XLE. And there we go. And if you go look at the stocks inside of the XLE, they probably look a lot like this. One strategy, when that sector gets hit, go look at the ones that got hit the hardest, that have fallen off. And if you get a sector recovering, maybe look at going in, you're going more of a value play, right? If you're doing momentum, you probably want to play the strongest ones. But it does give you a little insight. So and you can use leveraged funds. So for trading, I like to use leveraged funds. So instead of buying $10,000 of the XLU as a trade, I could come in here and for $3,900 or $4,000, I'm getting the same bang. I'm actually getting 3 times. So I'm actually getting $1,200. If I buy 100 shares of this, right, I'm getting 3 times what I would get on the other, man. As far as appreciation, obviously there's no dividends. Not really. So we're firming up. We're breaking out. This is day 1 of a possible stage 2 break. I mean, it is a stage 2. It's a little gray area because it's kind of still in the box. But this is right there, right? That was this right here. Now you're seeing it over here. Where do we expect it to run up to? Previous high. So I expect it to run up into previous high, man. Let's see. And they're always coming at me with some, you've hit your limit of music. Fucking ass clowns. Let's see. So that's UTSL. If I was extremely short-term trading this or purely swing trading, I got to have some kind of stop. I'm probably going to do two. One here and one there. So as if it comes down, I start downsizing the trade. And if it goes up, I start upsizing the trade. Get what I'm saying? If I'm purely trading this. I've traded this a lot. I'll hang on to it a lot of times, but that's me. My risk tolerance is probably different. Ticker. The ticker is UTSL. UTSL. That is the anatomy of a stock trade. An entry, a trigger of a stage 1 and stage 2. So we've been through one. We've been through stage 1. I need to go update, don't I? So we've been through the one. That was our accumulation phase. And we had what, 2 weeks, man? Where's it at? We got our anchor point from the sell-off. We started getting our action above the 5 up in here. That's confirming this anchor point. Tested it a few times, held. So we've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. 16 days, a little over 2 weeks building the box. All this in here. And now we've got the breakout above the box, above the 20-day moving average, which is right here, which is what's happening right here. Yeah, no, don't buy any if it moves past here. Because that would be what? That would be like trying to buy up in here. The further it gets, the riskier the trade, because we're going to be looking to take it down, right? If we're trading. So, and we have to trade this. This is a triple leverage fund. You can't hold it. It'll deteriorate over time. If you want to buy and hold, you go with the XLU, or you buy the actual stocks, Southern, Duke, Edison. Those are great stocks. Nothing wrong. I'm just showing you how to make a trade out of a sector. So as you're watching a sector and you see it forming up, you could go look, and as a trader, you could trade smaller shit. You put $500 in a triple leverage is like $1,500 in the regular. And so if you're but now it deteriorates the same, but that's why you buy a smaller amount, man. That's why you buy a smaller amount, because it can move against you. And you just practice that. Practice it with money that you're cool with. Like, that's how you do it. You practice it when you execute on a bunch. So where's the XLF? Now, here's the reason I said this. There's an article that came up in Barron's that said, what did it say? It said that JP Morgan sees 15% growth after rates normalize, or once they get past this little hiccup. So the XLF is made up of these banks. Berkshire Hathaway, they're so fucking big, they're a bank. JP Morgan, Bank of America, Wells Fargo, S&P Global, Morgan Stanley, American Express, Goldman Sachs, Schwab, Citigroup. You ever heard of any of these people? These are the boulders, right? These are the stocks that make up buying this fund, the XLF, which is not a fund, it's an ETF. So, but we can watch those ETFs. Like, so I want to watch the 11 sectors. So yeah, I'm watching the S&P, but after watching the S&P, I kind of want to watch the sectors. And what you're going to notice is some sectors are moving in lockstep. When the market's up, they're up. When the market's down, they're down. And that's how it moves. Moves right along with them. But then you're going to notice outliers. You're going to notice some sectors don't break down. And as you do that, you make awareness of it, or conscious awareness. And you say, And as you drive around, as you go about life, you're going to see the 11 sectors of the S&P 500 all around you. When you go to Target, you go to Walmart, you're part of the 11 sectors of the S&P 500, right? Consumer goods, consumer staples, like that's an actual sector. And if we were to go look at the XLP, that's the XLF. I use them every day in my real estate business, right? But what's the second. Well, let's pull up the discretionary first. XLY. What do we see? Tesla. That's pretty discretionary. You don't need a Tesla. Amazon. You don't need it, but shit, I use it every day. McDonald's. I do like their coffee, man. Home Depot. Shit, I'm there every day. Nike. You can live without it. Lowe's. Probably gonna need it. So you see what this kind of stuff is, right? This is shit we're just interacting with in our everyday. It's discretionary. Some of that we could cut back on. You'd be like, fuck, I'm not going to Home Depot. I'm away. But you might not be able to cut down on Procter & Gamble. Like you need to buy some shit, right? And so as we go through these, now what is this? It's another sector of the 11 sectors of the S&P 500. You may work in it. When I would ask you, which sector do you work in? You're like, oh, I don't know. Come on, man. And you know what sectors you work in and how they affect you. Or how is the universe going to bring you ideas? How's it going to bring you new and interesting trades? Some of the best money I've made are investing in large, well-known companies at the right time. And you go, what do you mean? I mean, it wasn't genius. It wasn't fucking, you think it was a secret when Buffett bought Coca-Cola in the 80s? Nobody had ever heard of it. It was only 85 years old. When he bought it, it was 90 years old. It wasn't a big fucking secret. What Buffett did is he bought it a long time ago when it was really cheap, and he bought a shit ton, and he sat on it. Well, guess what, guys? That works. I don't know if you know that. Like, you can go buy a bunch of houses and just sit on them, and over time, you're going to get rich. You can go buy a bunch of anything that produces cash flow or appreciates farmland, anything that just sits there and produces. And if you just hold it in a long period of time, you're going to have a bunch of money. It's not a secret. And that's what that play was about. People have done it in this. People have done it in Costco. What's his name made billions in Costco just by buying a lot. Well, you buy 10,000 worth. Guess what? It becomes 100,000. And what is that? It's probably one of 20 other deals in your house, which becomes $1 million, right? And what does $1 million become? And it's a lot of that while just owning, if you begin to actually pay attention in one's life and look for that value, look for that edge, look for that spot where I could take an extraordinary, maybe I take a little more risk than the next guy, right? And then I can make outsized, it's almost like a bet, man. I can take the other side of that. Walmart's coming down right now. Look at MO. What are these? What is this? Staples, right? People drink Coke in good times, bad times, Pepsi, Coke. They go to Costco. They go Philip Morris. They smoke their cigarettes. They're not going to stop, man. You could put Verizon and put AT&T and Verizon on here. You're not going to stop paying your cell phone. Some of you would be swinging on a pole before you did that. Mondeleza, look at all this stuff, man. This is stuff you have to have. Kids got to eat, man. You're going to go to Costco. All this stuff, man, is important. So when you're at the store and you go in, you see Procter & Gamble, you should think in your head, oh yeah, XLP. Well, what if we want to take this to another level? And you say, what do you mean? Oh, you want to be a trader? What's the 2 and 3 leverage of this? How could you leverage this deal? What if you saw an arbitrage? What if you saw a way? What if you saw a particular company? Could you leverage? Are there different ways to play Costco than just buying Costco? Because you putting $500 in Costco may or may not do anything. But if you leveraged it, if you knew a way to do that, that could be a big difference, right? So these are things you're going to learn daily as you just go about life, studying markets around you, man, XLU. I love these. You know why I love them? Because I pay so much in utility bills. You're like, what do you mean? Man, I pay a lot in utility bills. I got 3 of them just for me. 3 houses, I need 3 electric bills just for me. Not counting rental stuff. It ain't optional. What am I going to do? Turn it off? Like, it's a no-brainer. I mean, people are like, what? Why invest in real estate? Everyone needs it. Like, it's not some niche surprise thing. It's not like, well, emo people are different than these people, or Hispanic people don't need what white, they all need a house, man. Like everybody, we all do, regardless of age or race or color or social economic standing. We all need a place to live. And so it's the one product everyone on planet Earth needs. Now, how much they spend on it is I don't know. But when you're investing in have to have things, then the risk goes way down and the expectation of future results go way up because we have history. We can look at history of the thing we're investing in. But if you don't look at history and you just look at today, then you don't have any way of basing future expectation of return, right? You don't know. They don't know that Home Depot will go to $600, and then they'll do a stock split. They'll take it back to 90, and this game will just keep fucking going forward and forward and forward and forward and forward and forward. Coca-Cola just goes through depression and recession and interest rates and presidents and Fed chairmen, and nobody even there knows what fuck Fed chairman was there 8 years ago or 6 years ago or 5 or 3 or 2 or the last sell-off or the one before that. You can't remember it either. All the things that worry you now in 3 years, you won't even fucking remember them. You won't even remember. So everything that worries you now in 10 years, you won't even remember it happening. So a lot of these things that move stocks around are completely irrational stuff. So once we understand that and can see the future and see the big picture and walk inside of these sectors, man, it changes the way you see everything. I'm posting a video today on the money math of a house. And the guy said to me, and I'm not picking on you if you're on here, Gerald, I'm going to buy $45,000 in solar panels for my house to save on my electric bill. What do you think? I laughed. That's your big investment? I could take $45,000 and buy a house. Put 38 grand down. That's what I'm going to show him in the video. Turn it into 300,000. It'll pay the electric bill for the rest of my life, and the house will turn into $300,000 or $400,000. I mean, he's doing little math, man. He's doing poverty math. Like when you start doing that, trying to calculate return, that's not an investment. Lowering your electric bill? That's an investment for average people. That's an investment for normal people. That's not an investment for millionaires in the making. Millionaire in the making ain't going to get rich. He's not going to get his millions because he lowered his electric bill. He's going to get it because he bought property that appreciated, then he leveraged to lean in to buy more property and then to buy more property. And so what he gives up with that $45,000 investment in solar panels could be $1 million in the next 20 years. But he doesn't see that. You might not see it. You're like, I don't understand. I know. And that's why the 7% that understand what I just said own fucking everything, man. They own everything. The banks, the sectors, the utility companies, the parking lots, the buildings where the events are held, the guy where the restaurant rents. They own all that stuff. I just blew most of your minds. I'm like, yeah, but I'm going to save $100, Gerald. Yeah, well, I'm going to make $1 million. And the guy that makes $1 million don't give a fuck about an electric bill because he owns electrical companies and houses that pay his bills. You see the difference? Now, does that a bad thing? No, I'm not making fun of the guy doing the electric thing. I'm trying to point out to my friends that say they talk the talk and walk the walk. Oh, I want to get rich. Do you? Are you even making the simplest of mundane decisions in that direction? So what I know solar panels are not getting you rich. No one ever became a millionaire. Said, I became a millionaire because I bought solar panels. Never heard that once. But I have heard people say, if I put 45 grand in this property, I held it in 7 years, I rolled it, I collected 300,000 in equity, took that and bought a 700,000, ended up taking. I've heard that story 1,000 times. I got books on it, courses, I've seen it, I've done it. But nobody's done it with solar panels. So if you go to a teacher of prosperity, which is what I am, I'm not here to do a fucking budget with you. I'm not doing a fucking budget. Do you think this is better? What do you think? I could save a few. I'm not trying to save money. I'm trying to get rich, dude. And you have to transition from trying to save money to trying to build fucking wealth. And it's not how other people think. And it's not doing it with some solar panels. But maybe his goal is not to build wealth. It's to have a more efficient homestead. This is the, and that's not, and some of you guys have bought home and you're like, God damn, Gerald, I'm not picking on you. But I'm talking about building wealth, man. And the big component of building wealth is money. And if you give your money to mundane things with tiny returns that like that, then you can't get anywhere, man. You have limited capital now. You're going to put it to lowering your electric bill? I mean, you see how crazy that sounds to me. About half of my audience probably has solar panels. Let's see, man. That's where we're headed. What did he say? Good morning, Gerald. Quick question. Oh, yeah, David. Let me stop the whole class for you. Hey, everybody, hold on. We're going to stop the class. David has a question. Was checking out Roku this morning. He just showed up, so let's stop everything and answer his question. I was checking out Roku this morning because it's extremely discounted. Is it still a core position for you? Yes, sir. Now that we've stopped the whole class, let's look at Roku. We were talking about, I was trying to make you rich, man. Now we'll stop the conversation on how to get rich and we'll look at Roku. Yeah, it's in a downtrend, man. I'm not buying any growth stocks right now. And the only one I've been buying is Uber and DS. If you'd go to my newsletter, you'd know that. Instead of interrupting my class, if you go down the rabbit hole, buy the book, click on my newsletter, you'd know that. Let's see. A guy said to me once, that hurts my feelings, Gerald. And I said, well, you're going to have a hard time being an investment if a guy on YouTube hurts your feelings. Life's going to be hard for you. They might do it in person. Someone might look at you and not like you, say bad things to you. You'll have to deal with it. If mean tweets hurt people's feelings, they got a lot of fucking problems going forward in life. If a mean tweet could upset you, you're going to have a hard life, man. I was telling a story the other day about, or yesterday, we were in Discord. Somebody was talking about they found a dead raccoon under their house. Horrible smell. It's part of being a landlord. Let's see. And I was saying one time I had a house and I had to, I wouldn't buy Roku here, by the way, sir. I had to, there was a whole family of dead possums under the house. Well, it had rained real bad and water had gotten under the house. So underneath the house, under the crawl space down there, I'm crawling, there's mud, there's water, which told me I obviously need to do something about the drainage system. And I find a family of dead possums. So I got a headlamp on. I'm in the mud. There's flies everywhere and there's dead animals. And I got a trash bag. So as I pull the animals, they're coming apart. Their bodies are coming apart as I put the chunks of bodies into a trash bag. So it was kind of like a scene out of The Walking Dead. That was landlording for the day. You guys want to be landlords, right? Yep, back to my class, if you don't mind, David. We're going to go back to what's going up right now. UTSL is one we've been buying. It's breaking out. And our target is around $48. It's about $800 on. Now, we've gotten in over here, so you should be up a little bit, and then we added right in here, around 38 and some change. So you should be up a little bit. Should be up a little bit. Our target's 48. Nice, man. Looks good. Learn these sectors, man. Learn what stocks are in what thing, man. Get on that stuff. Like REITs and all these sectors, they have an ETF, and the ETFs breakdown really help you understand what stocks are in there. You can come over and look at them. You know, every day, pick one and just learn about it. And that's the easiest way to do it, is today go look at the XLP, tomorrow go look at the XLC, next day go look at the XL Boom, and then that day go look at that. And you just do that for 15 minutes and you go through that cycle a couple times. Shit, you know 40, 50 stocks, probably know about their dividend and basically know what the chart's going to look like. So then, like when I come over here, and a lot of times the other night, if you're in the Money Flow gang, I sent that thing out there and we burned through those stocks. I was like, all right, let's go. We'll go through them. If you know the language, I mean, you don't take no time at all, man. Once you're in the flow of the market, look at that. Cisco, Walmart looks exactly like it, right? It's too soon. Talked about Cube. Yeah, look at Duke's breaking out. Why is Duke breaking out? Utilities are breaking out. Duke's a utility. Southern breaking out. They're all going to be breaking out. You know, what does that tell us? I don't know. Safety trade. ETRN still a buy here. What he said, speaking of diversification, Uber is taking 21% of my portfolio, and I'm willing to add more. How about that conviction, Gerald? Yeah. Now, make sure it's your conviction, not mine. If it goes to zero, I don't want to hear it. Look at that Uber, though, man. This is a buy right here, dude. I've been nibbling on Uber. I bought Bitcoin for the first time yesterday. I bought Bitcoin. I've added to ARK twice. So you see how gentle I'm handling this sell-off and how non-aggressive I'm being. I just now bought a little Bitcoin, and it wasn't that much. I'm nibbling on Uber every day. This pivot point, I'll just go ahead and assume OG bought a couple shares. They're just dribbling it out. But don't let it get so big that it can blow you out. I don't mind 21%. I might hold up there, man. You don't want to blow yourself. You never want to be in a position where you get blown out if that thing is totally in the stocks, in my opinion. That's the way to make the most money, though. Here's an option on play on that too. Instead of buying Uber, next buy Lyft. Buy a little Uber, buy a little Lyft, buy a little Uber, one of them's going to win. Buy a little Uber, buy a little Lyft. They're both going to roll together probably, but one of them's going to win big. Same in Ford and GM or Pepsi and Coca-Cola or Nike and whatever, like the pairs trade, Chevron, Exxon. You can just do this for the sector. Bank of America, JP Morgan. You just keep going. Kroger's, fucking HEB. You just keep going. And there's 2 or 3, 4, 5 top players, and you just, accumulate them all, man. You don't have to do just one, right? So one way to cut down, it won't cut down on the sector exposure, but it could cut down on your risk, is by now buying Lyft instead of adding to Uber. I hope everybody understood what I was saying there. That's a little portfolio risk management. So instead of adding to all these growth stocks, just start buying ARK. She's diversified for you. And you're like, I don't know which stock to pick. Don't pick any of them. Buy ARK. If she doesn't go up, your growth stock ain't going up. Same game, same percentages basically. Probably about the same. If that's a way to simplify which ones do you add to, you're like, well, I can't add to 10, then add to 1. I just solved your problem. Well, I can't add to all these growth stocks. Then don't. Add to a company that owns all those growth stocks. And then you can trade out of it once they turn around. When they turn around, start to go up, you could take some gains, add it to this one, and keep doing what you were doing, man. It's okay to be in the red on a stock. I've had stocks in the red for 2 years that are paying me dividends only to be up 300% 2 years later, man. So don't let stocks force you to do anything. GP, do you like? Yeah, I like SHCD. I don't know if I like it for you. I mean, it's not going to ever go up very high, right? I mean, it'll trickle. Yeah, I like it, man. If we go back and look at the weekly. This is what I don't like about it. Well, it hasn't been that bad. I like it. There's other plays that are in the same area that I probably like better, but I like it. I've been buying closed-end funds. I've been buying some high-yield stuff here. GVL's one I've been buying, or GLV, sorry. GLV. This is when I want to buy these when they're on sale. PA, or USA, sorry. This is kind of one that I'm looking to buy here. USA, 10% yield. That's what I'm thinking. Thinking of having that in VTI in my Roth IRA. Yeah, nothing wrong with that. What do you think about Executive Order 14032? What is it? Apparently, it's going to crash the market and other meme stocks rise. I have no idea what you know how fucking stupid that sounds, dude. Gerald, what do you think of Conspiracy Executive Order 14032? What is it? Do you know? You should go look. Apparently, it's going to crash the market. They're going to do an executive order that destroys the planet. Maybe it'll... Come on, man. Get the fuck out of here. Get the fuck out of here. I've been listening to that shit the last 21 years. Everyone that's come into the Money Flow gang knows this for a fact. Every moment when people say to me, should I buy real estate or is the price too high? What do I say? I've been saying the exact fucking same thing for 5 years. You need to buy real estate. Price is not too high. It's just too high for you because you don't have any money. You need to buy real estate. Don't worry about the government. Don't worry about what other people are doing. You play the hand you're handed. 2 years ago, I had everybody telling me, oh, it's too high. It can't go any higher. And now they're all like, dude, I should have listened to you. I should have bought those houses now, or like blah, blah, blah. And I'm like, yeah, guess what? In 3 years from now, same story. Everyone pushes back on me for 21 years, every fucking year. It's going to crash too high. I've heard that my whole life from everyone I know. And I just keep buying properties. And then you add times amount, times yield, and you run that out. And you same with dividend stocks. If you just accumulate them and just keep holding them and ignore everyone that talks in fear and ignore everyone that talks about any sort of crash, fuck those people. They have no idea what they're saying. Your number one job is to ignore fear and accumulate. You do not have enough to even worry about a fucking market crash. You're going to save yourself 10 grand. Congratulations. Your only goal is to accumulate assets that appreciate and produce cash flow. And they might not in the next month or week or even year, but over time they do. And your biggest problem isn't avoiding a downturn. It's the fact that you don't have enough. That's the fucking problem. You don't have enough. You don't have enough to worry about it not going down. That's the problem. Everyone suffers from the same problem. Inactivity, not enough. They've wasted too much time. They put in too little, and they've developed not enough skills when it comes to how to manage and make money with money. They think solar panels saving them $50 is an investment. It's not a fucking investment. Investment's turning 50 into a fucking 5 million. That's investing. They think saving $50 on something you were going to put out enough that you could buy a home and call that an investment. It's not an investment. It's not an investment, dude. Saving money on your water bill is not an investment. It's not an investment. To even lump it into what I do is ridiculous. I can't even, I want to buy an electric car over a gas car. Don't call that you don't even know what you're talking about. Those are consumable goods that you're trying to get cheaper than the other one. They're both going to fucking zero. And you're going to pay electric one way or the other. And it's an outgoing cost. Your goal is to make money. That's what investing is, not save money. Yes, you want to save money in life. That's getting the buckets right. But saving money is not investing money. Investing money is taking money and putting it into an investment. And by definition, an investment is that it A, appreciates over time, or B, produces return in the form of interest, dividend payments, coupon payments, or whatever. Not save you on electric bill. Okay? That's average people stuff. That's not how millionaires think. And not to say they wouldn't do that for their building. That's not what I'm saying. And if someone's done that, I'm not picking on you. I'm just saying, as a wealth teacher, I'm not teaching that to build wealth. Saving you money on your electric bill is not building wealth. Investing money and putting it at risk to get return is investing. So we got to be careful what we apply that shit to, because it gives people the impression they did something when you didn't. Watching a YouTube video about investing is not investing. Getting your YouTube cheaper is not investing. It just kind of hit me the wrong way, man, because as I thought on this, I'm like, this is how normal people think, man. They think this is doing something. Drives me crazy, man. All right, Instagram, you guys be good. Appreciate you. Oh, I got a good video coming on real estate math. Peace. All right, YouTube. Sorry, I got a little sidetracked. That guy made me mad, man. That made me mad, man. And the reason it made me mad is I realized the thinking behind that. Okay? The thinking behind that. Because he doesn't have enough property. He doesn't have enough investments in real things. And when you have investment in real things, you don't care what your electric bill is, man. You're collecting $3,000 a month passively. All right, your electric bill's $400 or $500, whatever. Like, you get what I'm saying? That's where you need to be thinking. Like, how do I grow and multiply my wealth so I can live in abundance? And yes, we save money, but we're not doing major fucking investing to save $80 a month. Like, that's not the goal, man. It's to grow and multiply. And the return on a house isn't cash flow. That's what I'm going to show in this video. I could show him how to take that $38,000, and if he applies the formula that I'm going to show in the video, the return is 29% a year. Which means in 3.2 years, he's got 38 becomes 70. And do it again becomes 140, right? And that's just on the cash on out part. So the math is so ridiculous, and that return is a way of, it's crazy. It's shocking when you begin to see exponential math through legit investing, through something that appreciates, something that produces with expected returns. When you begin to apply that formula, it'll blow your mind, man. I might post it a little later today. Appreciate you guys.